Hey everybody, it is time for Market Movers, a session during the week where we look back at the week that we've had and look ahead at the week that's coming up and try and get our handle on the markets here. So that's what we're doing here today. I'm sitting in for Mr. Ben Watson, who's out this week, but hey, you know what? I'm glad to be with you. This is a shorter show. This is about a half-hour show, so let's get to it. Let me just mention I have Mike Fairborn helping me out in the chat. So as you have questions in the chat, feel free to type those in. Between Mike and myself, we'll try and do our best to keep up with those. You can follow either of us on X at Brent Moore CS, at Mike Fairborn CS. In fact, it looks like he pinned that in the chat. Thank you, Mike. And remember, the information today is for general informational purposes only. It should not be considered an individual recommendation or personalized investment advice. And let's see, options carry a high level of risk, although we're not going to be dealing with options today, so that's not something we're going to need to worry about here. But the paper money software application, which we will be looking at, is provided for educational purposes only. And it's, I think it's a good tool to try and help you out, but it is an educational tool as well. It's not a guarantee of that your performance on it is going to be any indication of exactly what it's going to be like in real life for you. Schwab does not recommend the use of technical analysis as the sole means of investment research. Past performance is no guarantee of future results or success. Hey, I'm glad that you guys are all here. Let's open up and just take a quick look at the market here. Let me just pull up my Thinkorswim platform. There we go. So this is the S&P 500. We're down 1.68% today. This was a huge week in the markets. We had, it was a very big economic data week. It was a very big earnings week. And it was also kind of a big external news event week with, for example, tariff news. So, and it was actually kind of going on fairly swimmingly, so to speak, until today, where you can see the nice big drop that we've had in the market. We're below on the SPX, now below our 20-day moving average. And, sometimes when I look at the pullbacks in the market, and I don't know if this is going to ultimately be a trend change or not, but I look at when we see a pullback, how does that pullback compare to past pullbacks? Because, we've had little pullbacks before, and sometimes they've been maybe as big. This was like a 2-day thing from yesterday's high down to where we are right now. But this is, very different than what we've seen for a little while there. So the markets may be a little bit more uneasy right now. And you can see a similar thing in the NASDAQ, which obviously has more tech weighting, some larger cap weighting to this as well. And you can see the pullback down about just over 2% on the NASDAQ. And with small caps, and we look at the Russell 2000, we're down right around the same amount, right around 2%. So it was a big move down any way you slice it in the markets. In fact, if we take out if we go to the SPX equal weight index, this is the SPX EW, that was down a little less. So about 1.25%, not a stellar day, but really that's telling me some of the bigger companies out there are the ones which have kind of led the way down. If I go to that visualize tab and you look, you can see a lot of red, and it's not all equal in terms of sector representation today. This is today's heat map. You can see this is IT right here, information technology, almost all red. I mean, there's a few little islands there. Those are real small stocks in there though. Communications and financials, the biggest groups are red. Which ones have held up pretty well? Well, Staples did okay today. Healthcare did okay today. Those tend to be more defensive sectors, right? In other words, when the market's going down, these are the sectors that tend to outperform. But the bad thing is, I don't know if bad thing is the right word, but the thing in terms of market performance is these more defensive sectors are smaller sectors. Okay, so they have less overall influence on the market. We'll talk about market waiting here in just a little bit more. But let's just kind of get to the news here. You know, one of the headlines, we've been looking forward to August 1st for quite a while because today was tariff day in the sense that it was the day when a lot of tariffs were going to be enacted. And ultimately what happened is, yes, we've got tariffs enacted. Essentially, the news is if the U.S. has a trade surplus with the country, just kind of the default is a 10% tariff. If we have a trade deficit with the country, then the default is going to be like a 15% tariff. But specific countries have their own tariffs. Brazil, 50% tariff. That's a big tariff. That doesn't mean, you know, I'm not implying that Brazil is paying the tariff. U.S. consumers are paying the tariff if they buy a product, or U.S. companies are buying Brazilian products are paying that 50% tariff. Canada, 35% tariff. Switzerland, 39% tariff. Now, China and Mexico are pending, still up in the air here. And it's important to note, as I think probably most of you know by now, the tariff situation is very fluid. It changes a lot very quickly here on this. You can see that certainly affected the market, but that's not the only thing that affected the market. We're going to get to that in just a sec. But what you can see is you can see that reflected in the VIX. Big spike up in the VIX here. Let me zoom in. We've been kind of cruising along, gradually getting lower on the VIX. We're up above almost to 21 right now on the VIX. That's a big 2-day change on that VIX. Now, I'm not going to get into any options trades or anything, but what that does mean is options premiums are higher right now, so that can affect certain options traders there. But it also is, you know, sometimes people call this kind of the fear gauge or an anxiety gauge in the market, and you can see that moving up on that VIX chart there, right there. Okay, so but normally a lot of times they'll get into the economic data later in the webcast, but I want to go right to that here because it was such a big impact today in particular here. So I'm going to US markets. I'm going to go to the economic calendar here on schwab.com, and we can look back at the week that was and look ahead to the week that has been. This past week here has been a week where a lot of people have been looking to in terms of important economic data. On Tuesday, I mean, we had the JOLTS report, which wasn't a big market mover. Wednesday, we had some good news. The first part of the week actually started off pretty good in the sense that we had a GDP number that was the advanced GDP came in above forecast. That's great. Advanced GDP came in above forecast. And when we say advanced GDP, just remember, GDP comes out and then there is a revision to it the next month. So in a month from now, we'll have a revision to the Q2 GDP. This was Q2, quarter two GDP, okay? And then next month, we'll have another revision to it. So they come up with the preliminary number, which typically is the first one that sets the tone on it. And then they can kind of make adjustments as they get more data in. That whole adjustment process is going to be a factor here in a minute. I'm going to show you, because that's something that really didn't help the market off today either, because we went through some past adjustments on labor numbers that weren't good, that hurt the market. I'll get to that in just a sec. Okay, in terms of so GDP was a number. The Fed interest rate, well, we didn't change any interest rate. There were no interest rate changes, and the Fed kind of said, hey, we're waiting on that. Yesterday we had PCE, personal consumption expenditures. This is an inflation report that the Fed tends to like to look at. It puts a lot of weight into these PCE prices. Well, it came in line, but that's a little bit of a higher number than what people want. People would like to see inflation tick down. One way to think about that is this. 0.03, that's a month-over-month inflation. That's core inflation right there, or the non-core is there. 0.3, and if you go by 12 months, that would annualize, and you can't just, it doesn't work out that way exactly, but that would give you, a 3.6% annual inflation, which is a little bit higher than what people want. So people would like to see that tick down, but that wasn't really a surprise. That came in where I think the expectation was on that. Okay. So now let's get to today, because today was really the one where the markets didn't love it. We'll just say that here. Number one, there's kind of maybe three things. We had ISM Manufacturing Index. Now we have ISM Services coming out next week, but ISM Manufacturing Index was a miss, and that's a decline of manufacturing activity. That is not, that's not great, okay? Consumer sentiment, okay, that kind of came in later, but that was a little bit of a miss. That probably wasn't the biggest factor in there. But it was the payrolls number that was a huge miss, okay? Now, I have a little something more to say about payrolls numbers here, but that's one that really hurt the market a little bit, because what happens is the Fed can be in a little bit of a bind. If they're not confident inflation is coming down to their satisfaction, but labor numbers aren't great, and labor numbers definitely weren't great. The inflation numbers are a little more iffy, but the labor numbers definitely weren't great. And this is just one report. Remember, one report can only tell you so much. But if that's the case, they're in a bind because they'd like to cut. If they cut the Fed funds rate, it tends to juice the economy, but that can also accentuate inflation. So we don't want a stagflationary environment where we have declining labor, but strong and high inflation. That's stagflation. That is not what we want. But let's take a look at some of these numbers here. I reposted some of these on X today. You can get these. Remember, you can follow Mike on X at Mike Fairborn CS, at Brent Moore CS is mine. But here's where I was talking about the revisions on numbers. Okay, let's look at non-farm employment. So this was today's number. Okay, but look at what they did here. Okay, look at what they did here. Last month, June numbers were showing this, and now they revised it down. May's numbers were showing this, and they revised it. They didn't just tweak it down. They absolutely, completely changed the whole picture in terms of employment, the non-farm employment report. As much as this miss, because, like I said, one economic number doesn't change everything. But the revisions were really a big factor here on this. And I think that really kind of set the day off on a bad tone there on this. A couple other things to look at. I talked about that inflation number. Well, this isn't a basic inflation number, but this is earnings. The one strong part, so to speak, depends how you view it, I guess, of the labor report is average hourly earnings went up. Well, that can be inflationary, so that doesn't help the situation either. And the other one I mentioned already was that ISM number, and you can see that decline. It tends to cycle over time, but we've been declining there on that ISM number. So some of those, if you want to see, you can check out my X feed, and you can see some of this this data, this economic data. here in a more graphical form. But today was a big economic day that moved the markets, no doubt. Going on to next week, what do we got? It's not nearly as big a week next week in terms of economic numbers or in terms of earnings. We'll get to earnings here in just a bit. But in terms of economic numbers, ISM services is maybe the kind of the biggest thing. It's just next week is just not nearly as big a week as this week. Now, I mentioned the Fed. Okay, we mentioned economic and inflation, and if the Fed feels the economy is more weak, then they're more likely to cut the Fed funds rate. Well, here's a graph of the Fed funds rate. This is the CME Group Fed Watch tool. Okay, this is a third-party tool. It is an estimation of the odds of a Fed fund, what Fed funds will be going out into the future. It's certainly no guarantee. So this is not a Schwab deal. This is just looking at implied Fed funds rates from Fed funds futures. Okay, but here's the interesting thing. So this is looking at the September meeting. And yesterday, I guess 2 days ago, when we talked about that FOMC meeting, they were like, well, we'll see about September. And people kind of interpreted that as we're likely not going to see a cut in September. Well, right now, it's showing about an 81% chance cut in September. Look at how things have changed on this, though. If you go back and look at the bottom down here, this is where it is right now. And this is the current level, about an 80%, 81% chance of a cut, according to this. If you go back just one day, look at the shift over the past day that we've seen in those Fed funds futures in terms of the odds there. Now, if you go back a week, it shifted significantly. It went down. It's like a roller coaster right now. Now, I don't know where this is going to be. All I can say is I'm sure this will look very different as we get closer to September. I shouldn't say I'm sure it will be, but it likely will look quite different than what it is right now as we get closer to September, because this always changes as more data comes, and things are data dependent here on that. Okay, so I thought that was interesting. Thought you may find that helpful there. Let's head on back to the Thinkorswim platform, and come on. There's a Thinkorswim platform. And just look at, we had some big earnings, some big companies that came out this week. One, we had an IPO this week, okay? So yesterday, in fact. So when I show this 6-month chart, it's not going to show me much here on this. But let's do this. Let's go to, say, a 1-day chart. Here's FIG, new company. This is a pretty big IPO. Let me see. Let me actually go back and see if we can get... Let me do a 5-day chart. Does this show? Yeah, this goes back to the IPO. You can see when it got shifted, when we got shifted, when it got the IPO coming out, we went up here. And David in the chat is going to add in something I just saw on the news right before I started, so I didn't mention it, but we'll get to that. But it looks like I think the BLS person, the Bureau of Labor Statistics person, I believe, has been fired because of the labor statistics issues there that we've had. But anyway, this was an IPO. Okay, so it just came out. You go, well, what is this company? Well, if you don't know what a company is, you can always go to the Analyze tab, and you can go to fundamentals right there. And you can go down here and you can read about it, okay? Figma develops a browser-based tool for designing user interfaces that helps design and development teams build various products, blah, blah, blah. You can go on, you can read all about that. But that's a new IPO. That was kind of in the news this week. Probably the biggest things in the news were some big companies. We had a lot of Mag 7 companies come out with earnings. And so let's take a look. But let me mention something else. Another company, big company, a Dow component came out with earnings. And here's UNH. So UNH, obviously, earnings didn't turn out so well on this. If we look back farther, let me go, here's a 3-year chart on UNH. Like, look at how far this has fallen, okay? UNH. And what we've seen is we've seen some underperformance of the Dow. Well, this is a Dow component, okay? And so what's the big deal? It's one stock. Well, one thing is the Dow is a price-weighted index. It's not market cap weighted index. And you may go, well, UNH isn't as big as some other companies on the Dow, but it was over a $600 company here. It's in a price-weighted index such as the Dow, it has a huge effect on the performance of the Dow. And I don't have time right now to do it, but if you compare how the Dow has performed compared to some of the other, like the SPX or the Nasdaq, the Dow has not done very well. I'm not going to blame it all on UNH, but UNH is a big factor to consider, especially when you're considering these, there's only 30 components in the Dow Jones Industrial Average. So each company has more weight. And when you go from $600 plus a share to $236 a share, that's a biggie, okay? In terms of that performance, that is certainly worn on that. Now, that certainly wasn't the biggest name to come out with earnings this week, but actually for a company, let's look at some, here's maybe the star of the performers. Meta came out with really strong earnings this week. A lot of it comes down to outlook. They had a very promising outlook, and you can see they jumped up. These little horizontal lines I have on the chart were kind of the implied move based on implied volatilities based on Meta before the earnings came out. And you can see, hey, it exceeded what the expected move was. It's now actually kind of dropped down. Of course, part of this drop isn't probably anything to do with Meta itself. It's just when the whole market drops, and this is a big cap company in the market, especially after you've made a extra big run up, probably not surprising it's dropped a fair amount. But that was kind of one of the stars of the week here. On the same day that Meta came out, Microsoft came out. And here was Microsoft, kind of the same story. Meta was the bigger mover than Microsoft, but Microsoft too had a fairly strong outlook. Their annual revenue from their cloud computing Azure platform exceeded $75 billion. Nice move there. And then last night after market close yesterday, we had Amazon. That was not so good. You can see the big drop that we had on Amazon. And another big mover this week was Apple. Okay. And here's Apple. Now, Apple today, it's opened up higher. Okay. The market kind of dragged it down and it's lower. But Apple, had this nice earnings here. It had both an earnings and a revenue beat there on Apple. And, one thing with Apple is, and any other company, there's different segments of the company typically, okay? One thing you can do on the Thinkorswim platform is you can go to the Analyze tab like you did. And if it's a bigger company, more often than not, they'll have this company profile area. And in addition to where the description of the company is, you get the fundamental stuff down there. But if you scroll down to the bottom, sometimes you can see what the components that make up how the company's doing. Apple's had very nice iPhone sales. That's a huge part. 42% of the company's market cap is basically attributable to iPhone. Okay, 34%. Okay, that's a big chunk of the company to Apple services. But when you look at things and you go, well, Mac sales, not so hot. Well, that's a small part of the company. iPad sales, not so hot. That's a small part of the company. Now, for me, I think if my wife has an Apple Watch and a Mac and I have an iPad and but that's really not the biggest part, and that's not really what's going to determine, for the most part, how any particular company is going to do here. Okay, so I'm just about out of time. Let me just think what else we got here. Coming up next week in terms of earnings, we talked about last week's earnings. Coming up this coming week, this is just S&P 100 stocks in terms of earnings. Yes, we had some huge names, Meta, Microsoft, etc. We have some bigger, well-known companies coming out next week with earnings, but nothing like we had this week. There's no Apples or Amazons or Microsofts or Metas next week. Palantir, Caterpillar, Pfizer, Amgen, these are Disney. These are bigger companies, McDonald's, AIG, but it's next week, just on the surface, we have a lot less that's going to move the market, either between economic reports, which we talked about, or earnings reports coming up. Now, of course, we don't know what news is going to hit, and that is, that can always change things. Let's just look at a couple things before we wrap up here. How's gold doing? Gold, jump up today. A little more uncertainty in the market. Gold's giving you a little bounce there in the market. When you get more uncertainty, quite often you see that jump in gold prices there. Someone was asking, I think, about natural gas. Here's natural gas. General trend down, okay? It's gotten cheaper. And the one thing about like gasoline prices, okay, is this. Here's gasoline. We've had a little pullback. Maybe perceived economic demand. Who knows? I don't know. There's a lot of different factors that can affect this. But down almost 3% today, that's certainly, that can certainly help the inflation picture, I guess, to a certain extent there when we talk about that. Let's see what else we got here. Any upgrades, downgrades, upgrades, nothing, no huge companies or I wouldn't say there's any huge upgrades or downgrades there in the market right now that we need to concern ourselves with. And I think I'm going to call it there, folks, because we're at time. And that's the market that's been and the market that's coming up next week, everybody. Thanks for joining me, and hope you all have a great, great weekend. We'll see what news comes out over the weekend. And thanks to Mike for helping me out in the chat. Bye-bye, everybody.